Hey, everybody. I think I'm live. Yes. Hello, everybody. Welcome to this live video on YouTube. This is my first time, well, truly doing this on purpose. I did it kind of by accident last time and had a few people join, which was fantastic. But today I'm going to do just a quick run through for strategy for small businesses, because we do get questions about that and what we do at Avalon. And then I have some Q&A questions, some that came through our Instagram on Monday and Tuesday. And if we have time, depending on what the live chat does as well, if there's questions there, I have a few questions from our previous YouTube videos too. So a few things to run through, but thanks so much for joining. If you're watching live or you're watching this later, really happy to offer this today. And I think everyone can hear me and everything. Give me a thumbs up if you can hear me and everything's okay. I think we're good. All right. So strategy for small businesses. And this is something I kind of feel so strongly about, where a lot of small businesses don't think that strategy applies to them, or they think it's like something you do when you get bigger or anything like that. And really, that's not the case. I think every small business should go through some process of strategy. And I'll take you through our process and what I mean by that. And the only things you really need to set yourself up for success in sort of an overarching way for your small business. And it's all the things you've probably heard about before: mission, vision, values, strategies within the strategy, and goals. So that's kind of how I structure those things. And it's really doesn't have to be a day-long process or a multi-day process with a bunch of people in a room or anything like that. I think as business owners, we know the best about our business and why we started it, and who our customers or clients are, and who we want to serve and where we work best. So really the mission or the strategy is supposed to reflect that. We always I try to start with kind of why we were around. Simon Sinek's Start with Why is a great place to start for that. But the other book recommendation I do have is the 1 Hour Plan for Growth. I should have brought it to show you. It's by Joe Calhoun, something like that. But he wrote this book where it's very much like you can fast track your plan for growing your business through strategy, and not have to take a lot of time doing it. So start with mission. Mission's number one. It's kind of what you strive to do, who you're serving, and that kind of thing. So what is your mission as a company? And at Avalon, ours is to help small businesses thrive. And that's very meaningful for us. It helps us get very close to our customer and what we want for them to achieve. And it also helps us with our decision-making process if we get an opportunity to do something for the accounting world. So like a video for other accountants or something like that. We know that that's probably not the best use of our time. So missions are really important that way. And I think just going through a process of understanding what you do, and it doesn't have to be perfect the first time. I think that's another big thing that people get into, is they think they need to come up with this perfect, beautiful strategy. And honestly, I have all of mine back to when I started, and it was like complete gobbledygook at the beginning. And looking back is almost embarrassing, but it got me started, and where we can get to a point where it's nice and clear and succinct. So that's a good place to start, is just get it out, get version 1 out, and look at it often and update it as you go. The next one, number 2, is the number 1 mission, number 2 vision. So this is who you want to be. Who are you striving to be in your marketplace or as a business? What are you looking to be and achieve? I've heard varying things here where, your vision needs to have a number and you need to know when you've achieved it. I don't really think that's the case. At least it hasn't been the case for us, and I don't really worry about that in the business. Our vision is to be the most sought after accounting firm in Canada. And it's bold. It inspires me. I don't know if I could ever, stamp down a date and say, like, we achieved our vision on this date, because it's not that kind of vision, but it does help me sort of strive towards that. And there's a lot of meaning in that for me. So I know that we mean not just clients, because we want clients to be seeking us out, and we feel like we offer a really good service. But we also want employees to be reaching out and seeking us out to work with us. So it's up to us to sort of make sure that we have a working environment that people want to be in. So that's really important as well. So that takes us to mission, vision, and values. So values, I think of as again, doesn't have to be perfect the first time. We kind of go through a process of figuring out what our values are, and it usually stems from something we see as important in how we do things, and then we just have to articulate that so that when new employees come on board, or in a moment of weakness, is how I often think about it. A moment of weakness, kind of look at my values and reset myself back on the path of, in what manner do we achieve our mission and our vision. So we have 8 values. I won't go through them all, but these are the things like um, reliability and enthusiasm and things like that, where you pick words and ideas that represent who you are and how you achieve the things that you set out to. So they're sort of the parameters for what you value in your business. And I think it's a worthwhile thing to go through, because you can point to that for future employees as well, to make sure that they're living up to the values that you've set up. Or if they're getting hired, do they identify with these values? I think, you have a very big mix of people with different values, and you're going to have some pretty mixed results from your business. So I think values are super important too. Then strategies within the strategy. I think that it's kind of a way of thinking of, how do we get to our goals? What sort of bigger ideas do we use to make that happen? And it works best with an example. But I think of strategies around businesses might be like, a strategy to increase revenue might be, at Starbucks, might be to increase per customer ticket price or something like that. So instead of just buying a small coffee, people are buying a pastry and other things. So the strategy itself is increase revenue through more per ticket cost or something like that. But then you get into tactics, and now there's a number of ways you can implement that strategy. And that's how I kind of differentiate between doing one thing with an overarching strategy to do something. Another example in our business is that we want to do client education. So we want to build long-term client relationships. We don't want a lot of turnover with our clients. And one way to have that happen is to really educate them, make sure they know what we're doing, how we're doing it in a way, and then providing that knowledge for them to grow their business through financial knowledge. So that's sort of a strategy that we have. And the other one's employee based, and how to keep employees happy. Lots of tactics on how to make employees happy, but we know as a company, we're going to perform a lot better, achieve our mission better by having happy and engaged employees that are around for a long time. So I would just suggest, and then you can get into goals and how you get closer to those things. I think that's the next step. And then, digging down deeper and deeper until you can get to actual to-dos. What do I need to do now? Because strategy is not meant to sit on a shelf somewhere and just collect dust. We do this strategy where you're thinking big, and then you're bringing it down into something small. So you get into maybe a 5-year goal that's really close to your vision and what you're going to be as a company and how many people you're going to help and all of that. Okay, well, if we're going to be there in 5 years, where do we need to be in 3 years, 2 years, 1 year? Okay, now we've got a year to do this thing and achieve this goal. What are the numbers that we should look at? What are our sales volumes? That kind of thing. Okay, well, if we want that sales volume, what are some things we need to fix in the business in the next 3 months? What are some bigger projects that might take, 20 tasks or 30 tasks? And then can we break that priority? We call it priorities. Traction calls it rocks. can we break that down to smaller and smaller bite-sized pieces so that we can do something tomorrow that gets us closer to that? And often, it gets off to the side of the desk. Of course, we're all busy business owners. But if you have that there and you see what the next task is and you've spent a little bit of time to outline every task and you're moving towards those goals, it's super inspiring. And we did some productivity work and things in the business over the years. And it has really sort of drove the whole policy, the whole process, because once you feel that real drive to get to your next priority so that you can reach your goals, so that you can achieve your mission and your vision, productivity becomes almost second nature. You almost can't not do it because you feel so driven to accomplish those things. So anyways, I was going to try to hope to keep that to like 10 minutes, that part. I hope that gives you a brief overview of how small businesses can use strategy, and it doesn't have to be super complex, and it should absolutely not sit on a shelf somewhere. But if you want to check out the book, I think I'll try to post this somewhere. But it's the 1 Hour Plan for Growth. It's such a great book for small business strategy. And there's ones like Traction as well that have a whole process around them. Anyways, we'll get into the Q&A. I'm going to start with Instagram because that's where I asked people to send their questions. And we got a few good ones. So number one, can you talk about declaring capital losses? Yeah, of course. So capital losses, they can happen, personally or within a corporation. And a capital loss is when you've invested in something, you've bought it for capital purposes, which is not for income purposes. You buy a piece of equipment, or let's pick something that can gain or loss. So I think the traditional way of thinking about this is probably for stocks, and let's just talk about a company stock that you buy today, hoping that it'll appreciate in value, and hopefully maybe you even get some dividends in the meantime, but it's going to appreciate in value and you're going to sell it at a capital gain. Well, capital gain is great income to have because it's only taxed at a 50% inclusion rate. So you only get taxed on 50% of that income, and that goes into your income tax. But if you have a capital loss, it's the reverse. So you only get half of the loss on your tax return. And the other thing with capital losses is you can't just apply them to any income. You need to apply them to capital gains. So if you don't have any capital gains in the year, you're still in a bit of luck because you can carry back that capital loss for 3 years. So if you have a capital gain sometime in the past 3 years, you can apply that capital loss and maybe get a refund for that previous year, or it carries forward indefinitely. So you claim that capital loss in the year. It sits there at its 50% inclusion rate, or exclusion rate, I guess it would be, on the capital loss side. And then you wait till you trigger some capital gains and you can apply those capital losses against them. So one other thing just to be wary of is superficial losses. You can't sort of trigger a loss and then rebuy that stock or bond. It's kind of within 30 days of that loss. So they call that a superficial loss. Anyways, if you're in that area and you're kind of worried about something, I would actually reach out to an accountant about it. Maybe have an accountant help you with your tax return for that year if you're declaring capital losses, because there are some tripwires there for sure. All right, question number 2 is, what advice do you have to keep your employees engaged while working remotely? So yeah, there's so many ways to do this, and I think the main one is like having a central place where people can chat and come together. So we kind of have 2 systems at Avalon. One is Carbon, which is our project management software. That's where all the work happens and everything sort of sits. Like if we need a record of what we've done with a client, or an email that's come in or out, or work that needs to be done, it happens in Carbon, and we can even go back and forth on a bit of a chat there. It's kind of posting a chat. And so that's a really, great way to collaborate online for work itself, is a project management piece of software. But I think where the engagement happens is really in Slack, which is our more chat tool within Avalon. And we have lots of different channels in there. So they're sort of channeled by topic. If you're not familiar with Slack, I think most people are by now, but we have our channels in there, and some of them are just like, we have a channel for pets of Avalon. So lots of furry friend photos in there. We have Where in the World. So this was a little more relevant pre-pandemic, because we had people working remotely and may work from different locations around the world, which was great. But Where in the World now is usually just out and about on weekends, going to local lakes and things like that, which is still fantastic. Then we have the Great Avalon Bake Off, the Gabo channel. So if we baked or cooked something that we're super proud of, we take a photo of it, and we announce a winner each month. So we have lots of little things going on. We do have what we sort of tongue-in-cheek call mandatory fun, which happens every Thursday, once a month on Thursday. Yeah, it's a oh, hey, Bishri, nice to see you. And Hamid, thanks for joining. That's awesome. I will take a look at your question in just a sec. So there's lots of ways. I think keeping people engaged it does take constant effort. And we have that mandatory fund once a month, and we try to come up with an idea. And it can be as simple as drinks on Zoom right now. Like, everyone can order an Uber Eats coffee or something like that. But it's really a matter of keeping lots of things happening and keeping people engaged throughout. We also have a kudos channel, which is super helpful, and look for any opportunity to give people a pat on the back. If it's a good email from a client, or just an accomplishment that somebody's had. And we do self kudos for sure. And the other thing is, every Friday we do a check-in, and we give people lots of high fives, and that comes through our Slack kudos channel. So yeah, thanks for that question. I have another question from Instagram. So Hamid, I'm going through the Instagram questions first, and then I'll get to the live questions as well. Somebody says, I'm likely going to hit $30,000 in sales this year. At what point do I start charging GST? Right at 30,000 is the question. And we get this question a ton, and it's a really good one. And congrats on getting to 30,000 with your business. So the thing with GST, we say, I often will say, don't wait till you're at 30,000. Like, come in with intention in your business to make more than $30,000 a year. Hitting that mark is definitely an accomplishment. The first sale and all those sales beyond that are fantastic. But when we're starting our business, like out of the gates, we're going to be spending money. And with GST, the way it works is it's a refundable tax. And as a business owner, if you're starting your business, you have to buy a computer, you have to buy a camera, maybe if you're a YouTuber or something. But you buy some equipment and things to get started, and you usually have more expenses than you have revenue at that time. And the thing with a refundable tax is that if you're registered for GST right when you start, you can get that money back. So if I buy a computer for $1,000 here in BC, I can get $50 back. And I don't know about you, but I don't like the government to have 50 more of my dollars than they need to. So I would register early on. If you've hit 30,000 or you're about to, absolutely, you need to register right away. I wouldn't worry too much. Like, it won't be a big worry if you're a little bit late. It's kind of when you start charging that GST. So I would start as soon as you're able, get that on your invoices, start charging that out to your clients. I think there's a component here too, to credibility. If I was, hiring a contractor or another business and they weren't charging me GST, I'd kind of be like, are you guys serious about this business right now? You would kind of think about that on the other side, on the receiving side, that, you want to impress upon your clients that that you are a business that's going to be around for a while. So, hey, let's register for that GST or HST account. So I would do right as soon as you can and start charging that out. And remember that your clients, if they're businesses, they get to get that money back as well. So it's no real problem for them. And I wouldn't worry about your invoice prices going up a little bit, especially if you serve other businesses. So great question. All right. So Hamid, what are the general costs for startups in the early beginning when there's no revenue, like administrative costs for bookkeeping, filing taxes, and all of that? Absolutely. That's a great question. So yeah, if you're just starting your business and we look at things like, your municipal business license is a big one. I remember when I tried to start a couple businesses in my late 20s, it always deterred me. Spending the $100 on your municipal business license seemed to be, on my business license seemed to be a deterrent for me. Probably showed how serious I was about starting my business. So municipal business license is one, and usually about $100. Some cities don't charge them, but you still need to go down and register. Other ones would be things like, oh, nice, Vancouver. That's great. So other ones would be incorporation costs if you're looking to incorporate. So you can do that through. I think we have a affiliate link on our incorporation video for some discounted ones, but a service like Owner, it'll cost you around $600 to do that. That's one thing. If you're going to be growing your business long term, can be beneficial to do early on, but make sure you watch that video because I cover that in a lot of detail. As far as the other things like the ongoing costs, Hamid, I always feel like you either spend your time or your money, and so things like bookkeeping, for example, if you're pre-revenue and you're not much is going on there, I find a free template. All you're trying to do is kind of keep your expenses sort of organized. But I mean, when we have people reaching out for new clients, or they're just starting their business, I like to start with, what's your plan for this thing? Like, what are you aiming to do here? Like, do you know that this is going to be successful and you're going to drive to success no matter what? Well, it might be worthwhile setting up a whole financial system at that point, setting up like a QuickBooks account, or we use Xero, love Xero. And so you might want to invest a little bit, maybe like $1,000 to $1,500 into getting an accounting system set up in the first place, or a bookkeeping system that's going to pay off over the long term. If you're unsure of whether this business is going to take off, it's kind of a test. You're seeing if people will buy this thing. You're maybe offering some services or something. Don't go overkill. We have a free bookkeeping template with a video that outlines how to do it. Just keep your business transactions separate and just keep that in a spreadsheet somewhere. Honestly, I keep it as simple as possible, and keep your costs as low as possible, especially when you're in that no revenue state. So yeah, I hope that answers your questions. I think there's other things like insurance. What I would do, and I've done this, is you can go to Futurepreneur. I'll butcher the spelling, but Futurepreneur is like a group. It's a government-run program in Canada here where they have like resources and some ways to get money for young entrepreneurs. I think you have to be 39 or younger, but they still have free resources there for like creating a forecast, and super helpful, because all you need to do, if you can download that, you'll see like, oh, I didn't think about this cost, this cost, this cost. So they have sort of an exhaustive list of all the costs involved, and you can just fill in what you need there. So if you can do the bookkeeping yourself, I would definitely do that pre-revenue. No big rush on doing the bookkeeping. I always kind of say, if you're pre-revenue, you got to ring the effing cash register. We need to make sales, and that's your number one job as a new business owner. And try not to get caught up too much in the administration. But of course, you're also a business owner. You can't ignore it for too long. But early on, get that cash register going. All right. Yeah, Vishri, awesome that you registered your business in Vancouver. That's awesome. Did that answer your question, Vishri? On I just went to. Oh yeah, thanks, Hamid. That's great. Vishri, did my previous spiel there on your HST question answer it? I hope so. And then, oh yeah, Vishri, using your personal, and this came up in a client meeting yesterday, actually. Somebody was asking whether they could use their personal credit card for their business. And I say, absolutely, but try to keep that personal credit card completely separate from your personal transactions. Like keep two credit cards, even if they're both in your personal name, one for business, one for personal. And I'd show you my wallet here, but I would keep like a business credit card and a corporate credit card or business credit card and a personal credit card in my wallet at all times. But I'd only use the business one for business, even though they're both in my personal name. So that's absolutely the way to do it. And it's totally fine. You can, it's more like a shareholder loan that runs progressively through your business. So all good there. All right. Moses, inquire about how to classify when meals expense will be written off at 50% or 100%. Actually, we keep separate accounts for this. So we have meals 50% account and we have a meals 100% account. So if you don't know anybody else on there, you can invite, as long as you invite all of your employees, you can have 6 events, up to 6 events per year that are 100% deductible, like Christmas parties or staff gatherings where everyone's invited. So we do keep actually separate accounts for those, Moses. Cool. PJ, could you please go over family trust, setting up a holding company and wondering if I should do family trust as well? Honestly, PJ, this is so unique to every business owner. Family trusts, a little bit outside of my realm. I'm not a tax expert. I mean, I went through the CA program, CPA, but we definitely recommend if people are getting into that, they seek out like a proper tax specialist, tax expert, and engage them for that. So sorry, I can't be more help there, but it is more of a specialized area. Cool. All right, I think I got all the answers here. I did have a couple questions on our YouTube comments section as well, which I'd like to get to, unless anybody here has another question. All right. Yeah, so what was this question? There was one about I needed to look this one up because I wanted to be sure, but there was about tax-free intra-code dividends question. I'm going to do some more research on that. It did come up at a staff meeting this week. Let me do some more research on that. That was from Phil about intercompany dividends. So Phil, if you're on here, really sorry that I missed this question today, but I will look this up and get it on the next one. And that's actually a good one. I did have a lot of questions from people over the last couple months about, what types of dividends there are, and a lot of misconceptions. I got a little bit of, I don't know, not flack in the comments, but when I did dividends versus salary, and I was sort of blasted with, well, you can pay yourself $60,000 a year in dividends and pay no tax. And I had to, call those ones a little bit, because it's just simply not true. Like you're going to pay tax on dividends. Like it's just the way it is, especially if it's your own company. You're going to see this come out of your pocket. But I understand the misconception. And the misconception is that you invest in some stocks or bonds, and let's say stocks in particular, and they pay you a dividend. Usually it's for the publicly traded company. Actually, always, if it's a publicly traded company, they're going to be dividends that are called eligible dividends. And if you're familiar with the way that dividends work, is that you get your actual dividends in your hand, and then they get grossed up to the pre-tax amount of profit that the company that distributed those dividends received. So you get this actual dividends gross up, and then they give you a dividend tax credit, which is supposed to emulate a credit for the tax that the corporation has already paid on those on that profit that they're distributing. So with eligible dividends, you can see that if that's your only income, you are getting this dividend tax credit, and it takes a while because they pay a higher corporate tax rate for you to reach taxability again at the personal level. But it's key to know that that was still your money. That corporate tax that the company paid was your tax. You paid tax on that. The company was profitable. It paid tax, which is you paying tax because you're an owner in that corporation, and they're just giving you credit for that on your personal tax return. So that's a common misconception, and it gets a little bit more, I guess, clear on non-eligible dividends, which are dividends that have been taxed at the small business corporate tax rate, which is actually a really low rate, somewhere between 9 and 13 or 14%, depending on the province that you're in. But it's the same thing. So you get, and especially if it's your business, you've already paid taxes at the corporate level. All the government is doing is giving you credit for that tax that they paid, and then you're going to pay the remainder at the personal level. So I understand it. Common misconception: you pay no tax. It's $60,000 a year of dividends or whatever. I get it, but it's just not true because you have paid taxes at the corporate level, and they're just giving you credit for that on your personal tax return. So hopefully that clarifies that. I'm probably have to do a whole video on this to spread the word a little bit more, but it's absolutely. I had to go to war in the comments field on that one. So hopefully that clarifies it. All right. So Nero, if my holdco owns my opco, how can someone purchase my opco? Yeah, and actually we went through this. We're going to do some more research on this because I honestly, our clients, we work with a lot of small businesses that haven't got to the holdco size yet. But my understanding is this, and I would be happily corrected on this, but your holdco is only supposed to own some of the shares. So you own the rest of them personally, and that retains your ability to sell your shares and get the lifetime capital gains exemption. But you can sell both. So the holdco would sell its shares, and you personally would sell those shares if you're going to sell your opco. So it really depends on the setup, and make sure, like, again, corporate structuring is pretty specialized field of accounting, and we definitely, even at Avalon, we would bring in a tax expert to make sure that we're doing things correctly, so that we don't run into trouble down the road. So it's a minefield, honestly, in the Canadian tax system on these sort of structural changes, but definitely worth the investment in a tax specialist when those situations do arise. Cool. All right. I'm going to go to another question here. Hopefully you got one on some of the videos here. If anybody else has a question, please post it here. Great. All right. I did have a question about payroll, how to post payroll to your accounting system. And I'm going to have to do a video or maybe even a blog post would be better for that. But yeah, payroll is one of those things about when you're posting to your accounting system that gets a little bit complicated and can be a little bit different depending on when your remittances are due. But definitely, that was from Mama Bear about 5 hours ago. She posted that question, and I will get back to that one maybe in more of a blog format or personally. So all right, so I have another one. I had a question from Tarek. If I have two different operating companies, do you need two separate holding companies for them, or can you just have one for the both of them? And absolutely, it's a great question. You do just need one holding company. That's the idea around a holding company, is it holds the assets that you own, so that the underlying assets or companies don't have a lot of investment assets in case there is some legal things that come up. Hopefully, with that barrier where the assets are really held in the holding company, that any sort of litigator or something or litigation and liability, they wouldn't be able to access the hold co. I don't know if I'd be happy. I want to hear from a lawyer if there's any lawyers out there that can tell me how bulletproof this is. Because I imagine when it comes to courts and that, they can trace maybe the same ownership or something and have access to that. But that's the idea around the legal part of having a hold co. But yeah, you can just have one hold co for multiple operating companies. No issue there. All right, great guys. Well, that was session number 1. I hope you enjoyed this video. Let me know about the format as well. I did a bit of a 10-minute segment at the beginning of the live Q&A about small business strategy. If you like that sort of format, or you just want to get straight into the Q&A, that would be really helpful to know for me for the future. So please let me know and post in the comments about that. I do have another question here, which I will cover. Yeah, I'm kind of interested to hear from everybody whether this is a good format. Where would you like to post your questions ahead of time? We like kind of pushing people to Instagram because we get some more engagement there. Happy to answer kind of from wherever they come from. All right, so I do have a question from James here. Thanks, James, for your question. What are some simple things that clients could do to help improve their businesses, i.e. help with tax time? It's absolutely important, I think, to have good processes in place, and they don't have to be perfect out of the gates. I think people, have this idea that they need to strive for perfection right out of the gates, but version 1 is the place to start. Really, truly it is. And then just incremental improvements. Where is it working? Where is it not working? You see like this 1% improvement every day, compounds into a lot of gains later on. I think that's the big thing. Like implementing strategy, James, is absolutely helpful from a decision-making standpoint. What's important, you get to prioritize your work a lot better. Say no to things that don't meet with those with your mission and vision and values and all of that. So that's really a good thing, because I think we get distracted as business owners. Opportunities come up all the time. For as far as if we get down to nitty gritty on financial stuff, keeping your bookkeeping up to date, hiring a bookkeeper if it's not your strength. I think, again, business owners, we try to be the doers. We see that we can do everything in our business. And so we try to do everything, but asking for help, getting people that are good at what they do. And I know that sounds a bit self-serving. Here we are as an accounting company saying, hey, you should hire bookkeeping and accounting. But it could be marketing. It could be the things that you're not have strength in. I think the business owners, especially when you're smaller, starting out, but continuing into later years as well, as you are the salesperson for your business. It's your job to drive the revenue side and watch on the expenses side, and you need someone else to be counting that for you. So that's a huge one. Having people to help out and good systems are going to help you come tax time for sure. Hopefully that answered your question. Oh, great. Thanks, John. Appreciate the Q&A. That's great. So Vishri says, so expenses incurred to set up the business, are they allowed to be used as business expenses? No, I didn't answer that question already, and it's a great one. So yes, I'll give you the short answer. Yes, absolutely, they're deductible. And the longer answer, which I think will help you in the future if you ever have questions about whether this is deductible or that's deductible. Really important to kind of structure those questions into a way that you can answer them for yourself. And the longer answer, and I think the more satisfying one, is that you can deduct any expense where you have incurred it to produce income. So if you're spending money to make money, you can absolutely deduct that expense for your business, with a few exceptions. Meals and entertainment, club dues, there's a few exceptions that you can't. But in general, that is our measurement of whether you can deduct something in your business. So all business registration, all those costs absolutely can be deducted in your business. And I like to give this example because it's a really good one. We've had somebody ask if their dog grooming could be deducted in their business. And you just kind of think like, oh, no, obviously that is a personal expense. But they made the argument, that they advertise with their dog, or it's it brings them in business and all this stuff. You start to go, okay, well, maybe. But I think it would become clear if you are a dog grooming service and you buy, some products to groom your own dog or something like that, or you have some sort of, your pet food business or something like that, maybe then it becomes really obvious that yes, grooming your dog is absolutely deductible expense. So it's one of those ones you could see could go completely one way or the other, depending on the situation. So it's a good one. Hamid has another question. All good. International student and youth incorporate in Quebec. Am I eligible for CCPC? So CCPC, as far as I know, could double check this, is dependent on your tax residency. So if you are a tax resident of Canada, you would be able to have a CCPC for the years that you're a tax resident. That's my understanding of it. I would kind of do like a memo and research on that one if you were a client, but that's my Coles Notes version of whether you're eligible for CCPC. And I will say that Quebec has some different rules as well. They do operate quite differently than the rest of Canada. And I'm always loath to give advice because I don't speak French, and they only distribute their tax information in official format in French. So I can't say definitively go look up that rule for Quebec because it's a tough one. That's a tough one. Sorry about that. All right, everybody. Well, thank you so much for joining today. I'm going to edit this video up and cut some things out and post it. So if you missed something, don't worry. It will be posted on the channel soon. And if you liked it, please hit me a like. That's always really helpful for me. And if you want more content and want to be notified of more events like this, I'm thinking of doing these Q&As once a month right now. Once a month. I will, just subscribe so you get notified for the next one. Follow us on Instagram to post those questions. And we do a story on the Monday before these, Monday and Tuesday this week, to hit all of your questions. And I get those sort of queued up so they come first. And then, subscribe to the channel, please, if you like it. If not, hit that, dislike button twice. Awesome. Thanks, everybody. And we'll hopefully see you on the next Q&A. Come up with those questions and I will be here to answer them. Cheers.